Welcome to Breaking News to Trading Moves.
Great to be here.
We're looking today at a pretty fast-moving situation where geopolitics and trade actions are hitting the markets.
hmm
Our goal is really just to break down what happened, see how it's affecting different sectors, and, pinpoint where the turbulence is creating opportunities and risks.
Yeah, it unfolded pretty quickly. We basically saw two main things hit the wires. First, China announced it's expanding export
Oh,
controls.
rare earths, right.
Exactly. Rare earth metals, but also, and this is important, the technology needed for refining them.
Okay.
And then, almost right after, you had President Trump threatening a 100% tariff on basically all Chinese imports.
100%. Wow.
Yeah, potentially starting November 1st.
Yeah.
And there were also these hints about new U.S. export curbs, maybe on critical software.
Okay, so quite a combination. And the market reaction. Predictable, I guess?
Yeah, U.S. equities sold off pretty much immediately as that news came out. A clear risk-off move.
Before we get into who won and who lost, maybe just set the stage. Why are rare earths such a flashpoint in these trade talks?
Well, they're just incredibly important. These aren't your everyday metals. They're vital inputs for a lot of modern tech.
Like what specifically?
Think electric vehicle motors.
Yeah.
Those powerful magnets often use rare earths.
Okay.
They're also in tons of general electronics, and they're absolutely critical for defense and aerospace. Things like guidance systems, specialized sensors.
Got it. So very high-tech applications.
Definitely.
So you've got China restricting access to these key materials on one hand, and on the other, the U.S. is threatening to basically double the cost of everything else coming from China. What does that combination do structurally?
Well, a few things become pretty clear.
Mhm.
First, input costs are going to go up for companies using these materials. That's almost guaranteed.
Makes sense.
Second, it puts a massive strain on supply chains, logistics, all of that.
Right.
But maybe the biggest thing is the expectation, the market bet, that this is going to really speed up onshoring.
Bringing production back to the U.S.
Exactly. Sourcing critical materials, manufacturing. The idea is a faster decoupling from China.
And on the rare earth point specifically, it's not just about digging them out of the ground, is it? China's control is deeper than that.
That's a really key point. Yes. Mining happens in various places, but China dominates the processing and refining. We're talking maybe 80%, perhaps more.
80%.
Yeah, it's complex, it's expensive, it requires specialized tech. So by controlling the export of that technology, they make it harder for others.
So even if a U.S. company mines the raw ore,
They might still need Chinese tech or facilities to turn it into the high-purity, usable form needed for, say, those EV magnets. This policy hits that specific choke point.
okay, that clarifies things a lot. All right, let's shift to the market reaction now. Where did the money start to flow? Who's potentially gaining from all this friction?
Well, the most obvious group, I think, are the U.S.-based rare earth miners and processors themselves.
Okay, why them specifically? Is it just policy hopes or can they actually step up?
That's kind of the million-dollar question the market's asking.
Right.
Right now, a lot of it is policy expectation and pricing power.
Pricing power.
Yeah, if global supply gets genuinely squeezed by these controls, suddenly domestic suppliers become much more valuable, almost regardless of their current output scale.
So investors are jumping in ahead of potential supply issues.
Seems like it. We saw immediate attention on companies like MP Materials, that's ticker MP, they run the Mountain Pass mine,
Right.
and also Energy Fuels, ticker UUUU. They're more focused on the processing side. The market sees them as direct plays on boosting domestic supply security.
Okay, that makes sense. Group number 2 benefiting seems to be domestic steel and specialty metals producers. This feels tied more to the tariff threat.
Exactly. That potential 100% tariff is so broad, it basically makes almost any Chinese industrial good or component prohibitively expensive overnight.
So U.S. producers just become way more competitive instantly.
Pretty much. They get shielded from that lower-cost import competition across a whole range of products.
And we're talking about the big players here.
Yeah, names like Nucor, ticker NUE, and Cleveland Cliffs, CLF. They're positioned to grab market share that might have otherwise gone to imports. Better volumes, potentially better margins for them.
Okay. And the third group is defense contractors, specifically those with U.S. sourcing. What's the angle there?
Right. So defense primes, these are the major contractors, the Lockheeds, the Northrop Grummons. They build the big systems for the Department of Defense, the DoD.
Like jets and ships?
Exactly. The connection here is that the rare earth issue is seen, fundamentally, as a national security issue.
Ah, so if the supply of critical materials for defense systems is threatened.
The DoD gets involved. They don't just wait and see. They actively fund efforts to secure domestic supply chains.
Through contracts.
Yes, often through long-term contracts and funding initiatives. So for
Mhm.
companies like Lockheed Martin, LMT, and Northrop Grumman, NOC, who can demonstrate secure U.S.-based supply chains for critical components.
This situation could mean more stable, predictable government funding.
That seems to be the market's interpretation. More support for ensuring that supply chain stability long-term.
All right, so we have miners, steel producers, and defense contractors as potential winners. Let's flip side now. Who gets squeezed by these rising costs and supply risks?
Well, the EV makers look pretty exposed.
Because of the magnets?
Primarily, yes. Those high-performance motors rely heavily on rare earths, so China's export curbs hit them directly. Plus, potential tariffs could affect other electronic components they import.
And what does that do to their business? Higher costs, I assume.
Definitely raises their bill of materials, their BOM cost for each car. For companies trying to scale up and hit profitability targets, that's a serious headwind.
Could it slow down production?
It could mean delays or maybe just higher prices passed on to buyers. It puts pressure on Tesla, TSLA, and Rivian, RIVN, companies really focused on efficient mass production.
Okay. Next group facing headwinds. Big tech and semiconductors, especially those with significant China exposure. The market certainly reacted to that threat quickly.
Yeah, their vulnerability is kind of twofold. First, their supply chains are incredibly complex and often run straight through China.
For hardware manufacturing.
Right. Any disruption there is a problem. And remember those hints about potential U.S. software export restrictions. That adds another layer of uncertainty.
And the second part.
China itself is just a massive market for their products. End demand. So anything that sours the U.S.-China relationship or leads to tariffs potentially hurts their sales volume in China.
And we saw stocks like NVIDIA, NVDA, and Apple, AAPL take a knock on the tariff news.
Yeah, their models depend on smooth global operations. This kind of political uncertainty is exactly what they don't like to see.
Okay. And finally, perhaps the most directly impacted group, U.S. retailers and importers who rely heavily on manufacturing in China.
Yeah, for them, that 100% tariff threat, if it actually happens, is, well, it's a massive problem.
Because it directly doubles their cost.
It doubles their landed cost, the cost to get the product from the factory onto U.S. soil, basically.
So they either have to eat that cost.
Which would crush their profit margins.
Or pass it on to consumers.
Exactly. Which means potentially huge price increases on store shelves. It's a really tough spot.
And this would hit a lot of everyday goods.
Absolutely. Companies mentioned include Hasbro, HAS, toys and games, and Nike, NKE, footwear and apparel. They rely heavily on that China-based manufacturing. Shifting that quickly is very difficult.
Okay, let's talk timing. November 1st was mentioned as the potential start date for those tariffs. That seems like the key date to watch.
Yeah, that's the deadline that's been floated. So leading up to that, you'd expect a lot of market volatility. Prices could swing pretty wildly based on statements, negotiations, rumors.
So watching the news flow becomes critical.
Absolutely. And looking at how traders reacted immediately, you see certain patterns emerge, what some call trading tape concepts.
Like momentum.
Yeah, watching the volume on those potential winners we discussed, like MP Materials and Energy Fuels, if you see high volume pushing those stocks through recent price highs,
It suggests conviction.
it suggests strong market belief that these policy changes are real and will have a lasting impact.
The analysis also mentioned pairs trading as a strategy here. Can you explain that quickly?
Sure, a pairs trade tries to isolate the impact of a specific factor, in this case, the geopolitical policy.
How?
So you might simultaneously buy shares in a company expected to benefit, say a domestic steel producer like Nucor, NUE.
The long side.
Right. And at the same time, you'd bet against, or short, a company expected to be hurt, like a retailer heavily reliant on Chinese imports, maybe Hasbro, HAS.
The short side.
Exactly. The idea is that you profit if Nucor outperforms Hasbro because of the policy impact, even if the overall stock market goes up or down. You're betting on the difference created by the tariffs and controls.
Isolating the policy risk, essentially.
That's the goal.
But these moves aren't guaranteed to stick, right? What could derail this? What are the main risks?
Well, the biggest one is probably de-escalation. If talks progress, if there's some kind of diplomatic breakthrough before November 1st.
Or if the U.S. backs down or offers lots of exemptions.
Right. If the policy gets watered down significantly or includes major carve-outs, then the whole thesis behind these trades could unwind very quickly. The winners might sell off, the losers might rally back.
Okay, so political risk cuts both ways. What else?
The other major risk is further retaliation from China. They've acted on rare earths and related tech. What if they expand that?
To other areas.
Yeah, maybe other critical materials, battery components, specialized chemicals, things the global economy relies on. That could create a whole new set of winners and losers we haven't even talked about yet.
So the situation is still very much in flux.
Definitely. Every headline, every policy statement could shift the landscape.
So maybe a final thought to leave our listeners with. What's the bigger picture here?
I think it really highlights how quickly political decisions and, national security goals can translate into real financial consequences across so many different industries.
And potentially changes the cost structure for everyday things.
That's the question, isn't it? Securing supply chains might be a valid goal, but does this path mean we end up paying a kind of permanent geopolitical premium on everything from EVs to electronics to sneakers because global trade just got more fragmented and expensive?
Something for us all to watch.
Indeed.
Okay, before we wrap up, the necessary reminder. This discussion has been an analysis based on the material provided and reflects the opinions therein. It is absolutely not financial advice.
Correct. Nothing here is a recommendation to buy or sell any specific stock or security.
Please do your own research or consult with a qualified financial professional. Thanks for tuning in to Breaking News to Trading Moves.